Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 10th of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own shots, and I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture.substack.com. It's published on YouTube after the delay of a week. Right, well, we've seen another few days of a cascade upwards, and we're reaching some of my targets. We haven't reached my ideal ones, but we need to be aware that we're running out of time. Now, the estimate I saw from the various oil tanks was that we were going to basically run out of the reserves. I mean, obviously, basically supplies down by 13 million barrels or so a day, and we were going to run out of above ground reserves, the reserves that have been released, and also the reserves that were on the sea at the time the Strait of Hormuz was closed. But there is more to add to that. I saw a friend showed me an article from Bloomberg the other day, and that was saying that the Chinese have actually reduced their purchases by 3.5 million barrels a day since the crisis started. Now, that actually potentially gives us another week or so before things start to bite, but the fact is, fairly soon, it is going to start biting. As for peace talks, well, we are where we were 2 months ago, which is that Iran has been ready to take the US surrender at any time, and the US has been ready to take Iran's surrender at any time. Obviously, neither of them want to surrender, neither of them are planning to surrender, and therefore we've not been making any progress, and there's no particular reason to think that we're going to start making progress now. So we shall see. I think they seem to be oblivious of what's likely to happen in oil markets. Well, the Iranians aren't. The whole point of the closing the Strait of Hormuz is, one, they want to take it over because I think partially as reparations for what the US, the damage the US did with their bombing campaign. But as far as they're concerned, they now control the Strait of Hormuz, and they're planning to charge everyone to go through it. That could make them 120 billion a year, which would put their economy in a far stronger position than it was before. And with any luck, if from their point of view, they could leverage the US to at the same time lift the sanctions on them, which would put them in their happy place. So we will see. At the moment, they've got the control of the Strait of Hormuz. It's hard to see that changing anytime soon. We shall see. All right. In the meantime, though, the fact is an awful lot of damage has been done by the fact that the Strait of Hormuz has been closed all this time, and at the moment there doesn't seem to be any sign of it opening anytime soon. This is going to cause a problem. That problem will be serious, and we will be seeing that soon. Right, let's have a look at ES. Okay, ES has been powering up here. These, I have to say, the trend lines I've drawn on here, I tend to just draw trend lines on everything just because it's interesting to see when they come together. But I have to say, these aren't the trend lines I'm mainly looking at. I'm mainly looking at the ones on SPX. And I've got a fair amount to say about those today. We will get to those. But in the meantime, hang on, wait a second. Right. In the meantime, this is the main trend line I'm looking at, and we haven't reached it yet. All right, we've got a 60-minute sell signal that's fixed. That never quite made the possible near miss target. I'm thinking that we may see a bit of retracement at the beginning of this week. We shall see. At the moment, the market's down. Well, the market's down 450, which is hardly anything, and it may be that we're not going to see much of a retrace. In terms of NQ, I have actually got a decent trend line here, and we are testing it, but as I said, it's not really the main trend line we're looking at. I am wondering if we could set up some negative divergence from here. We haven't got that yet. RTY has been fairly muted, hasn't gone back up and retested this high yet. YM made it up. The flag made the target at the retest of the high. Hasn't really got significantly beyond. I'd quite like to see this go back and retest the highs, the all-time high, that is. DAX, we've got a 6-minute buy signal fixed. Not really done anything so far, but I'm thinking we might possibly go back up and retest the all-time high there. And ESDX, not a lot happening, possible level top. In terms of Nikkei, has been heading up from here. This is obviously weakening the double top setup on the bigger picture chart. I don't really have any strong target for it. I will be looking to see if some trend lines appear. We've got a 6-minute sell signal fixed, and that hasn't reached possible limits target yet. So this is sort of just looking at a loss like the US one. We will see whether that delivers this week. All right, let's have a look at the bigger picture charts on equities. And first thing I want to have a look at, actually, I'll pull that over, is the main trend lines I'm looking at on the SPX and NDX charts. All right, looking at SPX, the trend line I posted a couple of weeks ago, we've actually already reached. And Qs, we've reached that one too. Well, we've gone through the first one, we're pretty close to the second. On the shorter term chart, this is the one I'm looking at, the third. On SPX, we have a pretty decent looking rising wedge here, and we could be testing resistance on that. We will see how that goes here, but I am wondering about that. So that is a trend line I drew in, and that is obviously testing at the moment. That could be a high, but I have to say, looking at Qs, I've got this really nice looking trend line here, and I am thinking that this looks like the obvious target here. So if we were to see that, I've got that up in about the 715 area, and that is actually a match with one of the trend lines on SPX, which I'll come to. In terms of Dia, I'm not really expecting to see anything more than the retest of the all-time high, but I would like to see a retest of the all-time high, which we haven't seen yet. In terms of IWM, I've got a couple of trend lines leaning slightly higher, and we haven't reached either of them yet. We shall see. All right, let's have a look at the bigger picture chart on the main charts. I've been drawing more charts lately just to experiment with other views. In terms of the SPX daily chart, if you look at the move up from the 2022 low, we've got a nice looking rising megaphone here, and I would be wondering about a possible test of this trend line here, which is currently in the 7,500 area. This is one of the main ones I've been looking at, and I am still wondering about that. So we will see. ES, not really looking at anything particularly in terms of the trend lines. We've got RSI 5 sell signals fixed on the daily charts on both ES and SPX. So we shall see how they go. On the hourly chart, I've got a nice move up from here. Obviously, the first sign that things are turning, because I'm hoping to get a topping process here. Obviously, given the level of news that we've got in, we might see a more dramatic move, but I would like to see a topping pattern form before we go down. Normally we'd get one. This might be an exception. Short term, we've got a possible RSI 14 sell signal break. On the 15-minute chart, we've gone we're almost at the first trend line I drew, but we haven't actually reached that. I'd like to see that reached in the first couple of days this week, ideally. All right, looking at the upper bands, obviously, we're on day 3 of an upper band right here. So I'm watching to see how long that lasts. The last one lasted 1, 2, 3, 4, 5, 6, 7 days. I wouldn't expect it probably to last as long as that. All right, in terms of the keys, we've got a weak RSI 5 sell signal fixed, and really we've been cascading up at a rate where I'm wondering if we're going to lose it. We shall see how that goes. But actually, sorry, I said 715. Actually, that's more in the 720-25 area. This is the obvious trend line on NDX, which I like, on Qs, which I like. Don't know if it's going to reach that. There may be other possible alternatives, but it's the one that springs to the eye. In terms of the hourly chart, we've got another possible RSI 14 sell signal brewing. 15-minute chart, we've gone through the first trend line, first 2 trend lines I drew. It's thinking about heading the third. All right, looking at Dia. Dia has retested this high here, and we got pretty close to a retest of the all-time high, and I would like to see that made. I am thinking there's definitely scope for the upside on all 4 of these indices. Although we are starting to hit some trend lines and may find some resistance. No, it's mainly the going has been made by SPX and Qs here, so that's where the hourly sell signals are brewing. Haven't really had enough action so far to see that on Dia. Okay, let's have a look at the IWM chart. Okay, IWM. This is really the obvious resistance trend line here, and I'm thinking it might reach that, and if so, if we did, I've got that currently in about the 295 area. No divergence on the daily chart. We have, no divergence on the daily chart. We've had 2 days at the daily upper band, but didn't see one on Friday. On the 15-minute chart, not quite reached the obvious resistance trend line there, which I've got a bit over 90, and might be a match depending on when it is reached with the 295 target. This is a very nice resistance trend line. This is a very nice wedge. I'd like to see it hit the upside again. All right, looking at DAX, wondering about a possible retest of the high. In terms of Nikkei, this is going higher. I've got a possible trend line here, and actually it looks pretty nice. It may, of course, go straight through it, but I'd be wondering whether it was a bearish overthrow, because the trend line is nice enough for that to be the case. We've got another RSI 5 sell signal fixed here, a little more upside, and we might lose that. All right, let's have a look at DX. Okay, DX, we have been going sideways. We are waiting for direction. As and when oil starts going up, seriously, I'm thinking we may see, well, so far when oil was rising, we saw a pretty good move up on DX. We may well see that again. My working assumption is that we may well see that, and of course we have some nice bull patterns on the bigger picture. Looking at the other currencies, USD still hasn't made the IHS target up in the 1.1875 area. GBP/USD, possible stopping action. USD/JPY, I'd love to see it reach 162, but I would note that when we were getting close to it here, this was a government intervention. In the meantime, I'm wondering, we had a double bottom break up that rejected back into the low, and I'm wondering if we might see it move to hit the full target on the double top in the 1446 to 146, 54.68 range. USD CAD, possible bottoming action. Australian dollar, NZ, not really seeing a lot. All right, let's have a look at those on the bigger picture charts as well. Okay, USD, no current divergence. We still got a weak RSI 14 sell signal, but that's reached the possible near miss target. I would say that we've got a double top which is broken down here with a target in the 97.1 to 97.2 range, and we haven't reached that yet, but we do also have a potential double bottom here, which could take us back up to these highs. Waiting to see. Thinking we'll see some action on that soon. Obviously, the bigger picture, as I've mentioned before, we've got this lovely bull flag on the dollar, setting up a retest of this high here at 114.79. I'm expecting to see a big move up on oil, probably a big move down on bonds, as we saw last time. There's a big move up on oil, and I'm likely to see, I think we will see weakness in the stock market, and we will also potentially see a big move up in the dollar, because that is what we were seeing last time. But we shall see. Obviously, that's matched by a bear flag on EURUSD and a bear flag on GBP/USD. Apart from that, we haven't got an awful lot directional here on the on any of these. USD/JPY, we've got a really obvious retest to be made at 162, but with the government intervening, when we get close to it, that's not really helping. In terms of USD CAD, I was wondering about a possible retest at the top of the range in the 1.48 area. In terms of Australian dollar, nice looking short-term double top here, and I'm thinking that might turn around. And we will see, but it's really all about the dollar. So we shall see how that goes. All right, let's have a look at bonds. Bonds, my lean is fairly short. We've got a pretty good bearish setup on the bigger picture charts. We've got a whole load of triangles, which are suggesting that we're going to see the dollar go down soon. And I've got some very big patterns suggesting that if things really go bad in terms of the oil market, which honestly I'm kind of leaning towards it doing, and we see a big move down on equities as well, we may also see at the same time a fairly serious pullback in the bonds market. And one thing that was particularly notable when this Iran war started was that bonds went down, not up. There was no flight of safety to bonds, and I'm thinking that may well continue to be the case. So let's CB. Really, I think this is a bearish consolidation, setting up at least a retest of this low on ZN. The same. And actually, we had a clear bear flag there. It broke down and we came pretty close to the low. I'm thinking it may be heading down there. We shall see. But in the short term, we do actually have some signals suggesting the other direction, although we have gone some of the way to satisfying those in the last few days. Okay, looking at TYX, bigger picture, we've got an IHS here. If we see a hard breakup, which would suggest that there was a big loss of confidence in US Treasuries. Now, the US administration has been working very, very hard to ensure that everyone does lose confidence in US Treasuries, but at the moment they're still actually holding up, and we've been holding well below the critical level in about the 6 area, which is where interest rates for countries as heavily indebted as the US would normally live. Now, the US has got the reserve currency, and that has been protecting it so far. I'm not convinced it's going to be a protection for the rest of this year, and I think this Iran war could be the trigger to start moving this up here, because if oil prices go above 200, I'm reading that the expectation would be the US inflation would go up to over 7%. If that's the case, then there's no particular reason to think that interest rates, not in terms of the Fed funds rate, but interest rates in terms of the yields on 30-year and 10-year bonds wouldn't break up from these inverted head and shoulder patterns and get up to at least the 7 or 8 area. And from there, it's a relatively short hop to get up to 9. I've got a similar pattern on the TNX chart, and they're nice. In the shorter term, we're looking at triangles. This is a kind of triangle, but it's actually a rising wedge. This is obvious next target within the wedge would be wedge resistance, currently at about the 51.5 area on TYX. Short term, we've got a weak RSI 5 sell signal fixed. I was warning about this last weekend, and I was saying that this may well push bonds up in the short term. We've not seen a lot of upward movement on it, but we've seen a bit, and we may well see a bit more, because none of these, well, this hasn't made the possible near miss target. We've got another one of those on TNX. That hasn't made the possible near miss target either. And we've got another one of those on TLT, and that one hasn't made the target either. So I'm reckoning that we probably see a little more bullish, a little more upside on bonds, but after that, I'm leaning fairly solidly bearish. In terms of the triangles, we've got, obviously, well, this is a wedge on TYX, and obviously got a target at the 51.5 area. Looking at TNX, we've got a nice looking triangle. This is a bullish triangle, likely to be a kind of bull flag. We've also got a really nice looking support trend line here, which is interesting. So I'm thinking this may well hold. In fact, I'm just going to draw that slightly differently and in slightly bigger way. How good is that trend line? Pretty damn good. Really not bad. So I think this is actually a solid trend line here. So I'm going to draw it much thicker, because I think that is now the controlling trend line on the bottom. So I'm thinking that's probably going to hold. We've got, in terms of the triangle, we've got triangle resistance currently in about the 46 area, or 46 to 1.1 to 2. In terms of the FYX chart, this is the 5-year yield. We've got another triangle with triangle resistance up here in about the 42.2 area. And on TLT, we have another triangle. Now here, this obviously goes up when bonds are going up. The others will go up when bonds are going down. So I'm watching mainly here the triangle support, which is currently in the 82.5 area, but I'm thinking we could continue up a little more before we head back and get that. All right, let's have a look at oils. All right, looking at oil. Let's just go through the hourly charts first. I've got quite a lot to say about the bigger picture charts, but in terms of the hourly charts, we've got we had a double top here on Brent. We went down, we made that target. We've got a further little double bottom here, and that is starting to break up. We could be heading back up to the highs here. We've got a 60-minute buy signal fixed, and that's reached the possible near miss target. CL, no target there, no signal there. We're breaking up a bit, no double bottom here. I think ultimately these are, I'm expecting really in a month or 6 weeks to very possibly see both Brent crude and WTIC over 200. I think that's where this Hormuz area logically goes. Hormuz crisis logically goes. Heating oil, staying pretty close to the highs. RBOB looks as though it may well be coming back up into a retest of the crisis high, which was actually only a few days ago. On NG, not really expecting to see nothing. I'm not expecting to see any move here as a result of the Hormuz crisis. We haven't seen any move here, I think, as a result of the Hormuz crisis. But I am still wondering if we might, after a fairly severe move down, see a relief rally. And if we break up from this IHS resistance here in about the 2.88 area, then we could see a rally up into about the 315 area, maybe a little more. We shall see. All right, let's have a look at that on the bigger picture chart. Now, first thing I want to show you before we get there, this is actually a price of oil prices going back to 1946. This isn't my this isn't from stock charts because I couldn't actually get the data to go back beyond 1982 on stock charts, but this shows you the two big oil shocks in the 70s. This is the first one starting in basically in 1973, and we see prices go up from 356 to about 11. And that basically tripled and stayed there. So this was actually a second crisis. This all looks like one big crisis, but it's actually two. This was the first one, OPEC's restricting supply. Then it was trickling up, and then we had a second one, which was the Iranian crisis. When obviously the revolution, the Islamic State, the Islamic clerics took over, and there was a big shortage. I mean, this was actually 4 million barrels a day came off the market. Big oil shock. This was another 5 million barrels a day came off the market. This went up from 1485 to 40, so tripled again. So this was people getting very, very sick of oil prices by the end of the 70s, where it had been gone up basically 1,000%. One thing I would note here is that after this crisis finished in 1980, it took another 5 years before prices started going up, down again, and really another year from there before prices got down to where they were beforehand. And we saw obviously relatively low prices for quite a lot of the next couple of decades. But those were the two big oil shocks. This one is the shock in 1990. This was the Iranian invasion of Kuwait. But it only really got us back to the top of the range. But that was back from 1750 all the way back up to 40 again. This was the Kuwait spike. We haven't really seen anything like these so far. And I'm pretty sure we're going to. So we shall see. And amazingly, even though he talked about it in the campaign last year, this moved down, even with Iran, knowing he was going to invade Iran soon. The US incredibly didn't refill their reserves, which had obviously been, we had some spikes here and the Ukraine spike and so on, and some of the reserves had been done there, and they weren't refilled. So that was a major missed opportunity, which I think will be regretted. But obviously it was forgotten in all the excitement. Now, in terms of Brent, I've got two things here. I've got this on all of them. Nice bull flag here. I read a post just after the crisis started talking about the smaller patterns here, the double bottom, which made target almost immediately afterwards. And we've still got a bull flag target to get us back up to 134.91. I think we're going to see that within weeks. Short term, you could see this as a potential double top. I don't think this has any chance at all of being a double top. So that would be a breakdown from 86, and we head down to pre-war prices and below. In a dream, that might happen. In reality, that's got no chance at all. We did have, and in the meantime, this week we did have a daily RSI 5 sell signal fixed. That's made target, so that's out of play now. In terms of WTIC, we had a double bottom here too. That made target almost immediately. But again, we've got an open flag target at a retest of 126.35. We've actually got an old extended double bottom target, which is still valid on a chart this size. Which would actually take us back up into a retest of the all-time high at 147.27. I think we're probably going to be at that all-time high retest within weeks. Heating oil, this is a different story. We had a double bottom that made target. Actually, I think that was an IHS actually. But we had an IHS that made target. We had a flag that made target 2. So we've got no open targets above, but if the others go higher, this is going to go higher too. In terms of the daily chart, not really an awful lot to see. We've got a couple of RSI 14 sell signals fixed here, but in terms of where we are on oil and where we are on the straight four moves, I think we're basically just waiting for the hammer to fall, and for there to be an obvious, real, immediate shortage of oil, due to obviously the supply of oil into the market having dropped by 13 million barrels a day, offset slightly by China's reduced purchases over this time. That's still 10 million barrels a day, and that's a lot. We shall see how that goes. In terms of gas oil, we had a double bottom that made target. We've also got a flag, and we've been making steady progress towards it. The 2022 high was at 412. That was an all-time high. And I'm expecting that to be reached within 2 or 3 weeks in all probability. We shall see, because we're not actually that far away from it. I think what I'm suggesting here is we're likely to see gasoline prices in the US considerably higher than they were in the 2022 crisis, which actually wasn't really much of an oil shock at all. In terms of, comparatively, still got a weak RSI 14 sell signal fixed here. Again, we're pretty close to the highs here. Natural gas, not a huge amount to see. I think we have demonstrated to my satisfaction that there's really nothing to do with the straightforward moves with natural gas prices, and gas prices wouldn't necessarily be affected, because while people do talk about natural gas on the straightforward moves, they're actually talking about LNG, liquefied natural gas, which is very much a different story and a different market. This has had a move down from basically at the start of this year. We got up to 5.565, and we came all the way down by March to, by the start of the war to 278. We saw a bit of a boost from there, and we came down further. I'm leaning towards this going down. I think on the bigger picture, the obvious read here is that this was a bear flag which is starting to break down. The obvious target is for this to rally a bit here and then continue down towards a target, basically at a retest of the 2024 lows. We shall see. All right, great. Hang on, just pulling that over because I need to make sure I'd save that chart. All right, let's have a look at the metals. Okay, GC. We've been kind of lost in space for the last few weeks. We had an IHS which broke up. All this time about will she, won't she, in terms of the negotiation with Iran about ending the war. We basically had 2 months of news that basically turned out to be rubbish the next day. The Iranians haven't really meaningfully negotiated so far. They've made clear the circumstances under which they're prepared to negotiate, but the Americans haven't accepted that so far. We're seeing how it goes, but in terms of the oil price and what's likely coming there, the main thing is that the Strait of Hormuz is closed. It doesn't matter who's closing it. It doesn't matter it doesn't really matter what's happening in the war. Mainly, it's about whether it's closed. Now, the war could affect it. If we start seeing a hot war again and we start losing some refining facilities, so then that could make the situation worse. But in the meantime, we're likely to have a fairly major crisis just over the fact that the Strait of Hormuz has now been closed for, I think it's 74 days. That's a long time. This was a serious mistake, and it's going to haunt us. In the short term, though, when we saw the crisis start, we saw gold go sideways to down. I'm hoping that next time, I think that was part of what was happening on the bigger picture with gold, and I'm hoping next time it will be a flight to safety. And it will go up. We shall see. In the short term, we got SI wondering about an ABC here, but at the moment it's not showing making any tracks towards the lows. We could be making a double top here to set us back to that, but I'm uncertain. Kind of looks like a bear flag on palladium, looks like a bear flag on platinum, but we're heading back up to retest the high. We shall see how this goes. But on the bigger picture, I would love to see these go up, and I've got decent patterns suggesting that might well be the case. In terms of HG, we had a nice looking double top here, but at the moment we're breaking higher. This is something I was saying might well happen, and I've got targets above. So I'll talk about those on the bigger picture charts. Let's have a look at those. Okay, gold on the bigger picture. Bigger picture, we have a very nice looking bull flag, which is formed. It's a perfect bull flag channel. It's formed from the all-time high, and I think we are heading back to flag resistance, which is currently in the 49.70 area. We've got a little RSI5 buy signal, which started at which fixed at the start of the week, and that's made the possible near miss target now. But really, I'd love to see this continue going upwards. I was a bit concerned about more downside. I'm less concerned about that now. I'm have to say I'm feeling that if we were going to see more downside, we probably would have seen it already. In terms of the silver chart, we've got a hang on, wait a second. Right. In terms of the silver chart, I am wondering about maybe a little more downside, but again, we've got a nice like bull flag. It has broken up. It might be extending into a larger flag still, but it doesn't need to do that. We can continue directly from higher from here. In terms of palladium, nice looking IHS, which is broken up with the target in the 2250 area. That's not been invalidated, and if it's not going to be, then I'm not seeing any particular reason to think that it's not going to go back up. We do have an alarming pattern here. We do have a possible head and shoulders that's formed. I'm not seeing any obvious reason to think that. I'm struggling to see any reason why that might make target. I'm still leaning on the bull side. In terms of the daily chart, no current divergence. In terms of platinum, already made the target to the upside. I'm thinking, however, that we may well see a retest next. We shall see. In terms of the daily chart, again, I'm wondering about a flag there, which has broken up. So we shall see. I don't think I've got a clear one on platinum. The palladium. No, I had a resistance trend line, but I didn't have a support trend line for it. But we'll see. That may well be a flag too. In terms of copper, the target I'm thinking we may well be heading back to retest is a retest of the high here at 6.58. We shall see. This is what I'm thinking. I'm thinking we might see. I'm expecting to see on high on equities in the next 2 or 3 weeks. Maybe as soon as really could be in a couple of days. Might be a couple of weeks. Anything after that, we're really badly into extra time. But I'm thinking while equities is making higher highs, which I'm still thinking they're likely to do, then we can go back and retest this high, and that would give us a very nice looking level top. Nothing to really see on the weekly chart, daily chart, nothing to see either, but you can see we're not that far away from the high now. I've got that at 6.583, and we reached a high of 630 on Friday. Not a lot to see on GDX. I am wondering, we had a little buy signal here which is made target. Doesn't mean it's necessarily got to stop. But I am wondering if we might see direct continuation higher, but you could see these possibly being bear flags. I'm not thinking that is particularly likely, but I am aware of the possibility. We shall see. All right, let's have a look at the other commodities. All right, KC. KC, we've got nice looking flag triangle, which is broken down and annoyingly not quite made it back to the low. I would like to see it complete that job, although this could be potentially close enough, and this could be a double bottom. In terms of sugar, we've got an IHS which broke up and made target. We've got a head and shoulders which is broken down, and that at the moment, I'm wondering if we might possibly fail. If it's going to fail, that would be on a break over the right shoulder high, which I've got at 1490. So I'll be watching that, but I am thinking that we may well return to retest the low. We shall see. In terms of CC, CC broke up from a bear flag channel. The bear flag is dead. There is no recovering it at this stage. I do have a target for that break, which is up here in about 4700 area, and I'm wondering if that might make target. All right, looking at cotton. Cotton, we have, sorry, I'm just having a little bit of disruption on my, all right, solid. Hang on, I'll just move on to the save charts. With me. All right. Okay, cotton, I'm thinking may well continue higher. Bigger picture, we've got a double bottom which has broken up on wheat. We've also got a double bottom that's broken up. We've been seeing Oh, sorry, that's lumber. Lumber, I'm thinking may well resume the downtrend. Wheat, we've seen a move up. This has broken over the double bottom resistance. I'm expecting, because of the shortages of fertilizer and the expense of fertilizer at the moment, we've seen actually an awful lot of the American spring wheat crop wasn't planted. Corn was being planted at the same time, but again in smaller quantities. This is already going to cause disruption. I'm expecting prices to be higher here. I've written a post on that. I'm still expecting that. In the short term, week 6-minute buy signal has reached possible near miss target. This looks like a bull flag. We saw a big move up. This looks like a retracement. I'm leaning towards this setting up the next leg higher. Corn, we saw a decent leg up. We've seen a retracement. Not a clear bull flag, really, but I am leaning towards the upside on this too. And soy, I'm leaning towards the upside. And I think on the bigger picture, this is a right shoulder of an iron chest forming. In terms of ZL, we've already continued to the upside here. We're seeing a bit of a pullback, which looks like a bull flag. On live cattle, we have a little bull flag forming here. I'm expecting this to break up into at least a retest the high and very possibly continue higher. Live cattle, lean hogs, I'm sorry to report that we are losing the double bottom here and continuing down below the 61.8. I am thinking that we may be continuing down. Don't know why. This isn't what I was expecting pork to be doing, but need to respect that it is doing it at the moment. And I'm not seeing much reason at the moment for it to change. Okay, let's have a look at the bigger picture charts there. In terms of coffee, I am wondering if this might all be a bull flag from this big high here. Could be. And we've got a potential little level bottom here. I'm waiting to see whether we find support here. No current divergence on the weekly chart. In terms of the daily chart, you can see the nice looking little level bottom here. Doesn't mean it's not going to continue down, but I am watching to see whether it might reverse back up. In terms of sugar, we've got an RSI 5 buy signal fixed on the monthly chart. This is generally a pretty good. Do these tend to make target? Yes. We've actually got 1, 2, 3, 4, 5 monthly charts, monthly patterns on this chart, and all of them made target. So really, I'm expecting to see a decent rally on sugar. In terms of the weekly chart there, we've also got a weak RSI 14 buy signal fixed, and we've also got a very nice looking falling wedge here. This really isn't bad. Less so on the support trend line, which has only got 2 touches, but this resistance trend line's got 1, 2, 3, 4, 5. That's a lot of tests, and I'm thinking this may well be about to break up. And as and when it does break up, I'll draw in the Fibonacci's and look at the pattern setup, and we will see how that goes. Do we have potential pattern setup here now? Yes. I like it when the second low on a double bottom is lower than the first one, because that makes it less likely that you've got a bear flag forming. But nonetheless, this is a workable double bottom, and if we saw a sustained breakup directly over 1610 from here, that could take us back up into about 19.5 area. We shall see. In terms of the daily chart, no current divergence really. Cocoa, again, we had a big high there. And then we saw a major fall to earth, got down to 28.46, and we are rallying from there at the moment. I think this is just an oversold rally. I think this is not meaning that we're going to see a big move up from here. I was leaning towards a retest of the low. We had this very nice looking flag channel here, which we've lost. I'm not seeing an obvious pattern here, but I'm watching out for the possibility that one may form to take cocoa higher. But I'm not expecting it to be an awful lot higher. We've seen, obviously, a huge move down. I'm just thinking that we are correcting some of that and just in an upswing within an overall downtrend. In terms of cotton, we broke up from a double bottom here. We haven't made the target yet in the 88.64 to 89.13 area, and I'm expecting to see that target made in the not too distant future. We have other patterns like that. We'll have a quick look at them. With short term, we've got an RSI 5 sell signal fixed and a weak RSI 14 sell signal fixed. I am thinking we might see a little more downside, but really looking at the chart on the hourly chart, I'm wondering if the next step is going to be a high retest. Looking at lumber, bigger picture, this is all down. We've got a double top with a target down about 350-250 area, and we've got a bear flag, which is when it breaks down, we'll have a target in about 350-250 area. This is all suggesting that we're going to go back and retest this low at some stage. But obviously, the flag has now been forming for 1, 2, 3.5 years. This is a long flag. So definitely one for the patient trader. No current divergence on the daily chart. In terms of wheat, this is the second of those four that I'm expecting to be affected by fertilizer. These have been forming for quite a while, but I haven't really seen a fundamental reason why these would make target until the Iran war started. Now it is pretty clear. So we've got a double bottom. It's broken up here. It's got a target in the 739 to 742 area, and I'm expecting that to make target too. In terms of the daily chart, no current divergence. In terms of corn, we've got a nice looking double bottom here. This hasn't broken up yet, but I'm expecting it to. As and when it does, I'd be looking for a target the 624 to 640.25 area, and that looks entirely reasonable. So we will see how that goes. In terms of the daily chart, no current divergence. And on the soybean chart, this looks like this was the one where I didn't have a bottoming pattern, and I was wondering why that was. But we have actually got a bottoming pattern forming here. We've got a decent looking inverted head and shoulders, and we've got a right shoulder forming here. Now, as and when that breaks up, that would have a target up in the 1560 area. That does look a little rich. And I would say one thing to say here is that, there's various talk about hunger and etc. But actually, this was the 2022 high. This rally I'm looking for on wheat wouldn't even get us back up to the. It would be slightly over 30% of the retracement of this move down from the 2022 high. Mass starvation is not suggested by these charts. Corn, make it up to 640, and we'll have retraced almost 60% of the move up and move down from 2022 high. Again, widespread famine does not seem likely. Soybeans. This would be a bigger move if we actually made the IHS target, but it still wouldn't get us anywhere near the 2022 high. When people are talking about people, starving and so on, I think there's more likely to be serious problems caused by lack of oil than there is in terms of lack of food. Could be mistaken, and of course, just because the patterns are indicating towards these particular targets doesn't mean they have to stop there. As we shall see. All right, let's have a quick last look at crypto. And okay, Bitcoin, I'm still expecting this to be a bear flag, but at the moment, we've got it up to 82.8K, and I'm wondering about a retest of that chart. This is matching what we're seeing on Solana at the moment, because Solana, having almost failed hang on. We've got an IHS here. It broke up with a target at a retest of 97.66, and it came very, very close to failing. A fail would have been a move down below the right shoulder low at 81.31. It got down to 81.38, and frankly, I was thinking the chances of it making this 97.66 target didn't look that great, but it does look as though it's coming back for it. We got up to 96.88 today. Solana's been a lot stronger than the others. Not sure why that was, but of course, the previous couple of weeks it was a lot weaker. So it might just be ebb and flow. But I'm leaning towards seeing the retest this high here at 97.66. That wouldn't give us a double top setup. It would be too large. Bitcoin, if we see a retest of 82.8K, could give us a small double top, which wouldn't take us back to the lows, but would give us at least a small double top. In terms of Ethereum, I am wondering about a retest of the rally high as well. That would be at 24.66, and that would give us a fairly decent sized double top. This has been very weak over the weekend, though. It's not really looking like the others. We shall see. All right, great. In that case, I think that's a wrap. Everyone take care. I will catch you guys again on Wednesday. And, watch out. Look out there. It's going to be a dangerous couple of weeks, I think. All right, cheers.